mind you, we pay by direct debit.
That's
most
a lot of
the time now.
wages.
Sure is.
Bloody
Expensive
But
stuff.
that could be, I don't know, is that just for, I don't know.
T. Brian's not happy with his shoes, so he's come back to get some of them returned with a cost value of 60. Tricky. They've not actually given you the sale price. You need to just work out that it's half. So you need to do two things. You need to adjust the sale entry and you need to adjust the cogs because he's brought that stuff back, so we can't keep it as the full sale because half of it's back. So I need to reverse it, and in order to reverse it I do the opposite of its nature. However, it's called sales returns and allowances because we need to track those to see how efficient we are.
But if we were just to write sales returns, but you still, that's still right, isn't it? You don't have to write allowances? Or you should?
I'd be fine with sales returns, yeah. GST clearing of 10, and then that reduces how much T. Brian owes me. So Brian only owes me 110 now because he's brought half back. So that's a sales return, and I would definitely have an adjustment note 3. Now I need to adjust that I've received those inventories back, and normally I debit COGS, so that means I've got to do the opposite now. I've got my inventories back. Do you know what we used to do? Well, you'd still do it if you're in the full course. You once you got the inventories back, they were obviously faulty or damaged or not able to be resold. So you had to adjust the value of that again. You don't just get to resell it for 60 anyway. We're not logically like that. So that is the cost reversal or return, whatever, of sales return adjustment note 3.
I have a question.
Yep.
You know how you have to do the COGS and inventories thing? Can you put that like in the same part as the sales returns to make it to show that it applies to that, or do they have to be in separate? There has to be a red line between.
Yeah, I think so. I think they're considered separate entries. I've always done that, and they can be fussy about who knows what.
So what's it say? Just sales return is the narration for that.
Yep, adjustment note 3.
Can I just go slow?
Oh yeah, look at that. Next one. Slippery Shoes owner took
That's
a
why
pair
you
of shoes and gave them to his wife. What type of entry is that?
Can we just hold on one second?
Took shoes, exactly.
Don't.
Do we record it at sale price or cost? That's right, because we're not going to charge the owner for a pair of shoes with his own business. It'd be silly of him to pay $95 or whatever it is for a pair of shoes when it cost him $55. He's not going to make money off himself. That's
Why
hard.
is the inventories and COGS thing $60?
Because he only returned half, and we know that because he originally had a cost value of 120. So we had to work out that was half to even work out the sale shoes
Oh, okay.
and the cost of the sale for the second half.
So they're confused with me.
Yes, I know. So, yep, it's a drawings and it's an inventories drawing. So inventories are going down, which means they need to be credited because they're debit nature. And drawings are a contra equity, so they're debit nature. So drawings is debited. So the cost, full value, think about that, 55. Part of that is GST, because we originally had GST that we paid, and now we don't deserve to keep that credit because the owner's taken it. So we can't say that that's relevant to our GST to offset it. And then inventories went down. We don't have to do a cost entry because it's not sold and we've already adjusted inventory, so there's no cost entry for drawings.
Why is GST on the other side?
On this one,
Yeah.
because GST is reducing with the inventories because part of the whole amount was GST and part of it was for the actual inventory.
Yeah.
Owner withdrew inventory for personal use. He wears them around at home for fun. Red underline. What are we up to now? The 12th.
So
Realises that advertising costs of $300 were mistakenly recorded in insurance, and you need to make the correcting entry.
I have a question with the drawings one. Is that 30 for inventories? Is that,
Oh, 55 in total, 5 and 50.
oh, the 19's just a date, don't worry.
Yeah, sorry, that's the one over here. Yeah.
Yes.
Next entry, yep, it's the wrong account. So originally it was put in insurance, so we need to credit insurance, take it out, and it should be in advertising. So I debit advertising, 300, put debit there for now, and credit insurance to take it out to the wrong account. If it had been one where we dumped the entry, you could reverse the entire thing and then redo it, but it wasn't actually in our list. We didn't do it. It was obviously last month or last period, so we're just going to switch which account that 300 went into. So that is a correction of error. And does it tell me the date? It doesn't, but if it did tell me the date, I would put date blah blah so that I could track it and I know what I'm doing it for later on, because I won't remember next month.
So you
I
don't
might
have to
not even remember tomorrow.
So that's all you have to do to fix that.
Yep,
Oh, okay.
that's it. Bill arranges with the bank an overdraft. What do we do for this question? Bill's organised that if he overspends, he can draw more in his bank account.
He's smart.
Do nothing. It's not an entry. He hasn't drawn on it yet. He's just arranged with the bank an extra limit if he needs it.
So that's the trick.
Until he uses it, that's actually, it's a trick question. Everyone always does it too.
So can I, wait, what's your
Credit
right?
bank overdraft, debit cash. Everyone does that.
So you give
Minus
this, there's a
3.
hint at the bottom after the after the table. It says, if you feel no entry is required, do not.
Ah.
Please write no entry required.
That's a tricky one, isn't it?
Oh, yeah.
Will that be on our review?
We write that on this.
Possibly. On the 30th, the rates paid on May related to the quarter ending 31st of July.
That's the end. That's
Balance
Another-
adjustment before that's
another financial year.
The rates of 300 paid on May. Oh, that's a prepaid expense. It's not often that those appear in general journal, but nevertheless, that's what's occurred. So this is a prepaid expense. Remember that that is a temporary asset, and it tells me that 2 months apply because the end of the financial year is the 30th of June. It always is. So it's for 300. 2 months counts, which means I need to remove 1. So 100 is prepaid, and then I'm reducing rates by 100 because I've prepaid it. I shouldn't have paid that much yet. It technically, in terms of accrual, it's not technically earned. So that's a balance day. Prepayment adjustment. There's no invoice or anything for that because it's an internal calculation. And lastly, balance day adjustment. The following balance day adjustment had been made: accrued revenues debit, dividend revenue credit. A reversing entry for this accrued revenue entry now needs to be made.
What's the narration for the balance day repayment thing?
Balance day prepayment adjustment.
And then
For this one, they've given you the entry and you just need to reverse it. So if accrued revenues is debit, then I'm going to credit it. If dividend revenues is credited, then I do debit. And that's exactly what I do. Dividend, revenue, 50, and accrued revenues, 50. Reversal of error.
so
Done.
that's all you have to do for that one.
That's it. That's question 2. That's to prove that you have an understanding of a variety of different general journal entries. There's always 10. Nice and easy.
We have 10 minutes left.
Is that all?
Yeah.
I've got a massive headache from all this talking.
Do you want to stop now? Because we've finished the question.
No.
We've got 10 minutes.
I'll never stop.
Never. We have so much to do.
Can I scroll and rub them all off? Get it, Stella?
Yeah, no, I got it.
Cool, babies.
I really need to go to the toilet, but I don't want to miss anything.
30 marks, that means that there's 3 marks per entry, 1 mark for a debit, 1 mark for the credit, which means if you get the account wrong, you lose half, if you get the amount wrong, you lose half, and you get 1 mark for the narration and the dates, and by being in the right order and all that. So,
Is there ever going to be a trick where it gives them in the wrong in the wrong order, like in the journal, in the
no. Like the dates?
Mhm.
No. That would be stupid, Ross. Question 3. Now this is where we're at now learning. Broken duster. School's full. Technically, I've calculated it should take you 2 hours and 20 minutes to do this test, and you've got a 3-hour block, so you've got heaps of extra time. I was supposed to adjust it, but I
This is
didn't.
our last one though.
Which is good, you have
I would have had legal. I'm gonna have legal that morning. I'm gonna want to shoot myself in the head.
Now, when do we have this exam?
It's the last day in the afternoon.
So if
No,
you,
that's not good because I feel obligated to study when I'm doing the exam.
I'm gonna be in a bloody another exam when I should be studying for this one.
Surely accounting's the easiest one you've got.
Yeah, it is.
Yeah.
But that doesn't mean I don't have to study.
True. True.
You're telling me I don't have to study. I want
But
to
you've
study.
got this, so you can just watch it 100 times. And do all the practice questions in your booklet.
Imagine if you had to show this to like a moderation or something. Imagine all the shit talk. Shit talk.
I've watched a couple of the grammar guys ones, and he's got the same stuff. Kids carrying on in the background. It's funny.
Can we? Do you reckon he'd let us watch them?
Yeah, I've got the link to his website. It's not a website. I don't actually.
It's all official then. Can we watch a couple just to see maybe like just to see maybe oh you're already down. Cool. What's his name? Bernard.
Burned.
Burn.
Oh. Guess what? I've found a cheaper bus company from Pathways, and it's going to save us $3.5 grand. And there's pop-down DVD players and USB chargers on each chair.
How is that cheaper?
I don't know, but I can't wait. The kids are going to be so excited. And then they won't talk to me because they're busy.
Where are you going?
Hobart.
Hope City.
Last week of school.
We never got to go to Hobart.
Yeah, why
No, that's because I wasn't around when you were doing it.
Well,
Sorry.
So I'm going to Hope
Pretty
City on
sorry.
Thursday.
Is the food going to be better?
Did you actually?
Absolutely.
Did you do it?
Tape Drysdale, dinner at James Craddock. The only thing that's sacrificed because that's
Shall we
so
stop
sensitive.
No, 'cause- oh, should we stop recording now so he doesn't think that
It is, yeah. No, I want to keep going.
We're
I'll
keeping on
find out for
going.
you later.
Can you show me in business?
Where's it gone? Oh, shit. Okay. So here's the question, gentlemen. Gentlemen, thanks.
Gentlemen.
So you've been given a trial balance for Innovative Enterprises. Beautiful name. Now these are the accounts at the
Shut your
These
mouth.
are the
you
accounts
filthy animal.
June 30 that are unadjusted. Unadjusted accounts. Now what they're saying to you is we have a number of balance day adjustments we need to make. Can you please do that? So go through and edit the balances as required and add any extra accounts that might be created after you've done the balance day entries. So things like accrued revenues, prepaid asset, they're not there because they're temporary and only exist at balance day. So I literally, if I'm going to be thorough, I might write out all of the entries so I'm sure that I don't miss anything, and then I'll go and adjust each account once I've done the entries. I do not mark your journal, so you could write it on a scrap piece of paper and throw it out. All I mark is your reports, and your reports will have those accounts. There's no point in marking it twice because if you've done it right in the journal, it will appear right on the report.
If you don't write it out,
So
can
you
you
don't
just
have to write it out. If you're smart and you know commission revenue 3.5, okay, I've got to go and increase commission revenue. So I'll go and cross out 21,000 and now make it 24.5, and then add in accrued revenue